Hi, everyone. Good afternoon and good morning. Let's wait for a few minutes for other attendees to join in, and then we can get started. Hi, everyone. Good afternoon and good morning. Thanks for tuning into this webinar. I'm Anant. I'm Chief Innovation Officer at Azzera, and we are back again, this time discussing how to manage allowance purchases more effectively around the EU ETS market, which has this year been, also in the past, been quite volatile. So for today, we've got a strong panel again on this session, starting with Yasmina, who is our head of aviation sustainability. Yasmina has a deep understanding of how operators think. So she's worked in ground operations for over 15 years, and she will bring their perspective to the table. Also, our guest contributor this time is C Carbon. They're a research and insights firm specializing in the EU ETS markets besides other carbon markets. And they've come up with some interesting information on how timing the market can help save on compliance costs. So before we continue, I have to give this disclaimer, which is we are in no way, shape, or form an investment advisor. We only give our educated opinions on this webinar purely based on historical data and trends. Secondly, if you have any questions around the webinar, you can type them in the Q&A box and we'll answer those slightly towards the end. We've kept about 20 minutes or slightly more for the discussion at the end. For today's agenda, we'll start with clear perspectives on business aviation and commercial aviation and how they're different in their approach to buying allowances. And we'll follow that up with a vigorous market perspective by the C Carbon team. So with that, I'll hand over to Yasmina to give us a brief.
Yes, hi everybody. My name is Yasmina and I'm the head of aviation sustainability at Azzera, where one of my areas of focus is aircraft operators compliance management and allowance purchases. And I've worked in business aviation for 15 years, as Anand said before. And I can say I know the struggles the operators are facing with EU allowance purchases strategies firsthand. So if we go to the next slide. Business jet operators, specifically those managing owner-operated aircraft, typically pass the cost of emissions allowances directly to their clients. However, they handle this cost in different ways. Some operators set up a monthly deposit with their clients, which they use to buy allowances over time, helping to spread out the cost. The others include a fixed cost in the hourly rate, for the flights that fall under EU ETS. And there's also operators that completely disregard the allowances cost until they have to make a purchase and they deal with it on the spot. So no matter the approach, business jet operators are under a lot of pressure to buy allowances at the best possible price to avoid backlash from their end clients. And from what I've seen, the biggest challenges for business jet operators are the unpredictable ad hoc nature of their routes, which makes it difficult to continuously monitor when they fall under EU ETS or if they don't. And then there's the risk of being stuck with the bill if an aircraft leaves their fleet, for example. But it has already contributed significantly to the operator's allowances requirements. And then as a third biggest risk, of course, is the fact that the operators, business jet operators, often have smaller teams, meaning EU compliance and allowance purchasing are just one of many tasks they have to juggle as a big challenge, right? So in contrast, commercial airlines pass the cost of emission allowances directly to consumers through their ticket prices, and they have larger teams and more predictable compliance needs, thanks to their scheduled routes. They're also more strategic in general about managing allowance purchases. They often use forward contracts and options to hedge against price fluctuation. So they're ensuring they stay cost conscious. So to sum up, it looks like different types of airlines have different allowance purchase strategies. Some are a bit unusual and ad hoc, while others have extremely forward-looking and planned strategies. So before we dive into what the market is saying with Sea Carbon team, I'm handing over to Anand for some initial audience polls where we'd like to hear your opinion on how you manage your emissions compliance purchases. Please, Anand.
Thanks, Yasmina. I think we'll run the poll slightly later on. Maybe we go first to the market perspective from the Sea
Sure.
Carbon team. And that's okay.
Okay.
Yeah.
Perfect.
Thanks, Anand. I'll jump in, taking the cue from here. And so, hi, everybody. This is Nikhil from Sea Carbon. I serve as a director focusing on the integrating modeling and market dynamics and identifying new opportunities. Overall, 2 decades of experience on the financial modeling side, moving to consulting with Sea Carbon. In this section of webinar, we'll explore on the EU ETS prices, the trajectory, the forecast, and how we come to model them. So we'll give you a great sort of those analysis in great detail. But before that, we'll just take 2 minutes to give you a quick introduction of who we are. And as you see on the slide, Sea Carbon, basically it's a market intelligence company providing data analysis, forecasting services for a wide range of environmental markets. Within this, obviously, as the name suggests, Sea Carbon is our key focus areas. And we have a stakeholder spectrum, which can include compliance entities, project developers, suppliers, financial firms, banks, law offices, etc. Our key services include crafting supply, demand, and pricing outlooks, and we'll run you through some of those as we move to the next slides. Anand, if I can ask you to sort of move to the next slide, please. Okay. So in terms of our range of coverage, as you see on the slide, we cover various markets, North America, EU, UK. We are also into clean fuel markets, offsets, and a number of carbon-linked mechanisms. Let's move to the next slide, please. Okay, so before we actually get onto the modeling side of things, we just wanted to take you through some of the volatility that has been witnessed in the EU ETS prices. And if you look at it, sort of there have been various phases in the EU ETS development over the period. In this graph that you see, we have charted a timeline with some major events in the backdrop. Pre-2018, where, for example, EUAs were trading at prices below 10 euros. Post that, in the sort of the phase 2 and sort of phase 3, around 2013 to 2020, there was a single EU-wide cap. Auctioning of allowances got started, and then MSR prices basically, and we had prices below 30 euros. If we look at the current phase, where we have also provided a lot of annotations showing how market and prices are being affected. It started from 2020 onwards with COVID, but prices surged post the Green Deal and the Fit for 55 package. If you look at the peak, almost we had 90 euros per ton. This was amid the geopolitical tensions, Russian invasion of Ukraine, which led to increased energy security concerns and highlighted the importance of reducing dependency on fossil fuels. So if you look at various aspects there have been some key things which have affected the prices, and we believe those would continue. First thing is in terms of the regulatory changes, which is one of the key aspects through which it is being governed. Then there are economic conditions, and there could be, let's say, major pandemics that can affect it. But beyond that, the prices are greatly affected by geopolitical events. They are affected by how commodity prices move, how, let's say, for example, with change in weather conditions. And so all of these factors lead to a lot of volatility. So the key thing here is that how do we moderate volatility? And for that, there are two aspects to it. One is to understand what would be the prices going forward, which comes from our base forecast. The second aspect is around what is the best strategy in terms of how you want to mitigate, let's say, the volatility, and look at some strategic way of buying or kind of investing in them. Now, again, we won't want to really talk about an investment advice, but we have done a certain analysis in which we show how things can vary over the years. Anand, if we can move to the next slide, please. Okay. So in terms of basically the model, we come and we have a very comprehensive model that helps us determine how we come up with the price of the EUAs. While it states, let's say, there are things on the supply side, there are things on the demand side. But if you look at it, there is a lot of considerations that go into it. First of all, if we look at the demand side, there is the emission intensity of production. There is a sectoral emission that we model out. So for example, we would be talking about how we look at aviation, and we have, for example, for different sectors like industrial, like maritime, how we're trying to model them. That sector granularity is important because each sector comes up with a different kind of sort of allowances. It comes up with different kinds of demand drivers and how things would shape up in terms of technology advancements, in terms of what are the price changes due to abatement, and also in terms of how the economy grows. If we look at the supply side, there are a number of different factors, obviously leading to, for example, linear reduction factor, market stability reserves, supplies, additional supplies, free allowances, all free allocation, which would be focusing on various sectors. So all of these combined would be part of the supply. And then when we look at supply and demand, we come up with a partial equilibrium model with an objective function to minimize the overall spending of obligated parties in the program while meeting the program objectives. So that is how, in a nutshell, we come up with a price forecast of EU ETS. We do that forecasting, let's say we go out till the next few years, till 2030, for example. And as we move forward in the next set of slides, we would be taking you through how we look at sectors first, and then look at an overall supply demand for EU ETS, because when we look at aviation sector, that may be just about 4% of the overall market. So it in itself is not a price driver, but all of these things when added, we look at the combined sort of aggregate model and then come up with the pricing drivers for it. So I will ask my colleague Tarana to now run you through the aviation specific analysis.
Okay, hello everyone. So before we actually dive into the broader overview of the entire EU ETS market, let me just give you an overview of what is the current scenario and going forward, how does the emissions of the aviation sector are expected to increase. So for this, you can see we have an estimate here on this slide. So aviation emissions, in fact, reached like a record high before air travel was abruptly halted owing to COVID-19. But then aviation emissions have already started to increase since 2022. Aviation remains the second highest source of transport emissions in EU after road transport. So Sea Carbon has come up with an estimate of the emissions going forward, which is expected to increase at a steady rate. This is going to be largely driven by the rise in aviation activity. So in terms of EU, which is one of the largest aviation emitters in the world, it is anticipated that intra-EU flights are expected to increase by over 80% by 2030. That is basically an estimate given by ICAO. So now, while aviation accounts for just around 4% of the overall EU emissions, so any change in the emissions from this sector will not have great impact on the EUA demand side. But from aviation operators' perspective, there are certainly certain regulatory events which are important and will impact their own demand for allowances. So in this, foremost is the phasing out of free allocations that is going to happen like completely. I mean, it will happen gradually, already happening from 2024, but from 2026 onwards, it will be completely phased out. Then the second important event that could impact the demand of individual operators is the interplay with CORSIA. So right now under EU ETS, we know that only intra-EU flights are considered and other flights going from EU or coming into EU are exempted. So this exemption came into being so that CORSIA could develop, and it has already been extended couple of times. And right now it is extended till the start of 2027. But in 2026, it will be again reassessed. And if CORSIA's strength is not proven, then maybe outgoing flights from EU might also come under the EU ETS lens, which of course, in that case, from operators' perspective, they will have to comply for these additional emissions coming from those flights. And then another important event is that the EU Commission, it is going to establish an MRV system in 2025. Which is going to track the non-CO2 aviation emissions, and it is going to calculate that on a per flight basis. And by the end of 2027, the Commission will do an assessment of these emissions and submit a report on this. And a legislative proposal is expected to come out of that to tackle to this. So in case these emissions also comes under the purview of EU ETS, then again, it will entail requirement of some additional allowances to meet this, to cover for these emissions. So with that, we can move on to our next slide and see what's the scenario for the broader EU ETS market. Okay, so on this slide, you can see that there are two charts, and the top chart shows the supply demand as bars for each year, and the EU ETS cap is shown as a line. So the current policy framework, in fact, ensures that fundamental compliance with a basic level of free allocation is there. However, the free allocation to aviation operators, I've already told, is going to get phased out by 2026. So over the decade, if we see the market stability reserve release is going to gradually rise, which will help in fact, maintaining equilibrium in allowance supply. So with this, you can also note here that as per the Sea Carbon estimates shown here, the total allowance demand is going to exceed the supply in 2026. And the aggregate emissions under EU ETS during the period of 2025 to 2030 will stand around somewhere around 6,500 metric tons of CO2, with each year seeing the emissions fall gradually reaching around 1,000 metric tons by 2030. So all these estimates are in fact as per our base case scenario, which considers a moderate supply of allowances and like current policy regime to continue with current targets expected to, no change there. So this is indicated in the chart below also. If you will focus the annual surplus, which is for the initial years, you will see this annual surplus from 2026 onwards. The green bars are going down, depicting that there is going to be a deficit there, and the market will be able to feel some tightness over there. However, on a cumulative basis, if you'll see, there's still going to be a positive surplus till 2030. So this is all this is as per our base case scenarios, but as Nikhil has already briefed you that there are so many drivers that determines our model. So C Carbon also has two additional scenarios, which one of which is like accelerated decarbonization scenario, where we'll see companies actively decarbonizing, getting into like reducing their emissions by making more technological interventions or other interventions, which will see their emissions going down. And the other scenario is a sluggish scenario, where we'll see the opposite. So in all the scenarios, in fact, the surplus allowances are still expected to get depleted starting 2026 with a positive cumulative surplus, which we can see here right now. So now we can go on to next slide, where we'll just give a very brief overview of how prices would vary across these three forecasted scenarios. Right. So on this slide, you can see that our base case scenario, in fact, predicts that by 2030, the EUA allowance price would be somewhere around 80 euro. Now it predicts, this is of course based on a scenario which predicts moderate levels of EU price, considering that the current policy landscape and no major changes in targets till 2030, as I previously mentioned. So of course, needless to mention here that the low price of EUA will lower down the pace of emission reduction, because companies would of course opt in for EUAs rather than reducing their emissions with low abatement. And on the contrary, higher prices will be triggering faster abatement in the emission intensive sectors and hence drive accelerated fall in the allowance demand. So considering these variations, it is very essential for aviation operators also to strategize how they should formulate their strategy playing in the EU ETS market. So on the next slide, we'll just give you a brief, very brief overview of how we should be strategizing around the market. Yeah, right. Thank you, Anand. So on this slide, before I talk about what's there on the this slide, we already know that the aviation sector comes under the purview of EU ETS and refuel EU regulations, which are like critical for managing the emissions in this sector and helping the sector achieve their climate goals. And as these regulations expand and evolve, it will be very essential for the operators to stay informed and proactive. So a structured approach, in fact, to meet the compliance obligations should aim to balance the market and ensure a steady supply of allowances throughout the year. So I've already shown you that C Carbon has already maintained that the EU ETS market will tighten by 2026. And hence, companies needs to opt for strategic planning. So when we talk about strategic planning, companies in the aviation sector and for that matter, even in other affected industries need to adapt their compliance strategies considering the higher cost of emissions and the need for more efficient operation to mitigate financial impacts. Now, an overall tightened supply and inclusion of additional sectors which are expected to drive the price of EU allowances reflects increased demand and reduced availability. So it becomes all the more important. Going forward in future, it is also expected that the ongoing adjustments that we see right now in the EU ETS, it clearly underscores that EU's commitment is towards stringency in climate action. Businesses must stay informed and proactive in their approach to carbon management, leveraging tools like forward contracts and futures to hedge against price volatility. Also on this slide, I've given certain factors which could be considered as we navigate through the market, be it prices of EUs, demand supply dynamics, power sector consumption, the lost opportunity in case we are blocking our money in EUs by purchasing it, or uptake of alternative fuels. All these factors will remain important. So some of these factors we try to give coverage to these dynamics by way of our regular releases also. So now with this, we can move on to our next slide, where I'll briefly compare some buying strategies. So on this slide, what you see here is that we have delved into the strategies for timing your carbon market purchases. You see here two charts to discuss. One is like on top, the carbon price trends, and then below you'll see an analysis, a case study analysis, which we have done on a hypothetical basis. Let me first tell you what's there on the top. So in the top chart, you'll see a chart which is plotting carbon prices over a span of 4 years from January to December. This visual presentation basically highlights the monthly trends of EUA price fluctuations, which will remain important for you as you plan your timing to purchase allowances throughout the year. Now, the case study below the hypothetical example that we have crafted here, it basically is a table which summarizes a case study that explores 3 different purchasing strategies. The case study assumes that one entity needs to purchase around 1,000 EUAs. European allowances. So we applied 3 different distinct strategies to the real prices observed over the last 2 years. Our first strategy here is an early purchase. So an early purchase would mean that right after your compliance deadline has passed and the new year has started, the company starts investing into this. So this strategy involves basically buying, if we bifurcate these 1,000 allowances evenly in over the quarter in 3 months. So 333, close to like 1,000 divided by 3 allowances around May, June, and July, considering that April till now was the compliance deadline. We know that it has shifted to September, but right now for the purpose of this example, we are still considering April. So purchases equally across May, June, July, well ahead of the compliance deadline. This approach is basically designed to capitalize on potential lower prices which comes earlier in the year, and also it will help avoid the volatility that comes closer to the deadline. Now, my second strategy here is a last minute purchase. Here, the entity will buy allowances in the last minute window of February, March, April. This strategy will take advantage of potential price drops or a weak market as the deadline approaches. But again, it also comes with the risk of higher prices due to increased demand as the compliance date nears. Now, our third strategy here is a monthly purchase thing, which is spreading your purchase of EUS evenly across the year on a month-on-month basis for the purpose of this example. So, in fact, this strategy aims to average out the purchase price and also reduce the impact of market volatility. Both second and third strategies also averts the risk of extreme events impacting the demand of individual entities. For example, COVID-19, which severely impacted the aviation activity and hence emissions. So in case of any bank of EOS with any companies, since the requirement for since emissions dropped, the requirement for allowances dropped. So hence any bank of allowances with these companies would have been left unused. So the outcome of this, what is the final analysis based on this table? You will see that the results of these strategies applied to the actual prices from the past 2 years we have done here. The results from our case study clearly reveals the strategy 3, which is the monthly purchase approach, results in the lowest overall cost for acquiring US. This is because it effectively averages out first price fluctuations. Second, it reduces the risk of encountering higher prices due to the market volatility or last minute buying pressure. But further, our strategy 1 also to note here is which is early purchase strategy would also entail an additional opportunity cost since the funds invested in these EUS are blocked for the entire year. So while calculating the numbers for 2023, we have also included the foregone cost, which we would have the foregone opportunity had we invested this amount in any other financial instrument and earned some interest there. So that is the additional cost here. In summary, essentially, spreading purchases throughout the year it not necessarily be a monthly basis. It can be at a monthly basis, at a quarterly basis, or even like alternate month any other preferred frequency could provide a effective strategy by mitigating the impact of price spikes and taking advantage also of varying market conditions. You can navigate through it and you can just time it out. So formulating such a strategy would in fact require factoring in a market outlook, what we provide, considering how the price trajectory would shape up in light of current and future regulatory and market events. So at C Carbon, we market changes by way of regular weekly and monthly releases, which gives a view on how recent market events have impacted the price. And it also kind of gives our subscribers a view of the future events and how they're going to shape the market, which could impact the market. So yeah, that's pretty much on this. And feel free to ask me any questions that you would have on this or any of our previous slides.
Thank you very much, Tarana and Nikhil, for giving this in-depth market analysis. It's interesting to hear that regular monthly purchases can actually be more cost-effective than buying in one lump sum. So from our perspective, you can't have good allowances purchase strategy without a reliable and up-to-date information, right? And that's where Azzera Celeste steps in. It automatically captures your post-flight data with API connection. So you're always looking at the latest completed flights. It calculates emissions using your chosen fuel monitoring method, and it tells you which flight falls under EU ETS. And then in the end, you'll always have a clear picture of how many allowances you need to buy for each flight. You'll also be able to produce a per-tail emissions report for your end clients on a regular basis. And this will ensure you'll be informed of the upcoming compliance cost, and so will your clients. Celeste will also help you track your compliance status and is also forecasting your emissions based on your last year's trend. So it will show you this year's data on top of last year's and then forecast when you will surpass the EU ETS threshold. So to wrap up, everything we've heard today in a volatile EU ETS allowances market, Celeste is the tool that can support your allowance purchase strategy by providing an instant assessment of your EU ETS status through an API connection. And it's providing that on a regular basis, which is very important, and which will also allow you to make more informed decisions when to buy and how to buy it. So if you're interested to learn more, feel free to reach out to myself or my colleague Anand, or reach out for a demo, of course, or you can also meet us in person at Air Charger Expo, the first event we're attending in September in London. So yeah, over to you, Anand, for the Q&A session.
Thanks, Yasmina, and thanks, C Carbon team, Nikhil and Tarana. Really interesting slides. I have a lot of follow-up questions, especially on your forecasts and your supply-demand projections. While people get started and put questions in the box, I'll get started with my own first. What was the largest factor that you see affecting allowance supply in the coming years?
Okay, so I think in the coming years, there are, of course, various events that are going to happen. But if we talk about like largest factors, then I think most significant ones would be, first of all, the change in the linear reduction factor. So basically, we have seen that how the linear reduction factor is going to increase at 4% from 2028 onwards. So I think that will directly impact the supply and demand. And then the second one is the discontinuation of refuel power EU front loading, which will definitely going to impact the allowance supply in the coming years.
Interesting. And and it's interesting to tie it up to allowance cumulative surplus in the market, right? So even though all of these activities happen, these events happen, the allowance surplus still exists all the way till 2030, and there's not much change in price as a result. Can you elaborate why there's so much of surplus in the market today?
So
Okay, I can discuss that. So, see, what has been happening in EU is there has been a huge amount of surplus. If you look at one of our charts that we had shown earlier, the surplus, in fact, we look at different carbon markets across the world. EU ETS is basically the highest, has the highest surplus across all of the markets. In
Interesting.
fact, we also look at an index called bank index, which we look at, let's say, the overall surplus that we have, and we kind of look at it from a perspective of trailing 12-month emissions.
Mm-hmm.
So that number is again the highest across different markets. So while yes, the allowances would be decreasing over the period, affected by both LRF factors as well as kind of the front loading that has been done, we would still be looking at, and on a year-on-year basis, from 26 onwards, there would be a net deficit, but the huge surplus in the initial years will still take time to kind of go down, and hence we still end up with a net positive surplus around that.
Interesting. And I guess that ties tying that to prices. I saw your base case scenario that it's kind of very flattish, so it doesn't spike up too much till 2030. But if you look at the other scenario, which is the aggressive one, the high case scenario, there's a huge difference between the high scenario and the base scenario in terms of prices. So what's different in the high case scenario?
Okay. So see, when we look at kind of our optimization model, it obviously includes a number of factors like supply, demand, etc. There is also something around marginal abatement. There is obviously when we look at it from a sector perspective, but these marginal abatement costs also look at, for example, what would be the typical price at which the industries would start transforming. And that's an important input into our model. And now let's say when we look at, for example, a differentiation between a base case versus an accelerated decarbonization scenario, what we're looking at is how the linear reduction factor would change from a supply perspective, how stricter policies would be enforced, and there would be consequently a sort of a consequent to that, how would that lead to better compliances? Then we are looking at, for example, in terms of total free allocations, how that would move. There is a consideration of MSR kind of being maintained with emission constraints, and emissions ultimately peak in 2024, but beyond that, they would decrease. And also we have a CBAM expansion post 2026, which reduces kind of the free allocation.
And
So
what's the weightage, do you think, just very roughly, rough estimate, technology interventions versus political or more design interventions?
that's a very tricky question, Anand. So because political interventions is something that is really hard to predict.
Yeah.
But what we are looking at is more from, let's say, an economic growth perspective, how the economy would grow. And with that economic growth, there would be a consequent, let's say, higher decarbonization scenario.
Mm-hmm.
So we can't really kind of incorporate all policy actions around it. But the idea is that there will be a higher growth and a higher decarbonization, which would be really reflected through LRF mechanism and kind of such other allowances, which would be reducing.
Yeah. And in terms of your policy radar, what are you seeing in terms of the strengthening of EU climate goals for 2030? Is Fit for 55 going to stay? Is it going to become stronger?
So EU has been always kind of leading in these initiatives throughout kind of the last decade. So we do still see EU as kind of tightening their sort of policy measures. And I think I just saw news that they're being sued for being too lenient also.
Yeah.
But so the idea here would be that, yeah, I guess it would be tightened. EU wants to be a kind of front runner in that. And the only thing that remains is how they are able to kind of have the complete European Union get through that. They have been typically doing it through looking at allowances. But as the allowances decrease and the CBAM comes into effect, it would play into a lot more political field rather than just purely policy. So I think that interplay between politics and politics on both sides, I would say, being a front runner versus also looking at how the industry doesn't kind of move beyond. That is, I think, the key that we would be following keenly. Yeah.
Interesting. That's really helpful. Thanks. Slightly more simpler question around EUAAs. So there's been some recent news around the discontinuation of those aviation specific instruments, EUAAs. Does that have any effect on supply demand?
Not really, I would say, because it is essentially not a discontinuation of EUS, but starting 2025, what will happen is these allowances will shift to the broader pool of general allowances. So there's no cut down on allowances. It's just moving from these EUS to main allowance pool. And till now, there were like separate auctions happening for these EUS, but now it will be just as part of the normal auction. So in fact, this will to certain extent might even end up adding certain liquidity to the market, I'll say.
Interesting. So it adds more liquidity to the auctions that are already happening.
Right.
Thanks. And is there going to be some kind of price fluctuation that's going to happen as a result of that change, the EUAA entering the EUA auction market?
So EUA entering auction market, and secondly, I think there's another perspective to it is that the free allowances would sort of go off. But I think overall, see, EUA is typically, as an aviation sector in itself, is very low. It's kind of 4% of the overall EU ETS compliance that we look at. So it won't really be something which can affect the price. But when you look at all of them combined, for example, how the aviation would move if, for example, if there are major things around, let's say, looking at flights beyond the EU sort of region, then it could really affect, I would say, the sector definitely. Beyond that, I think there would be minimal impact from aviation sector in itself. What would be keenly sort of watched is how, let's say, kind of different industries, and industrial sector is, let's say, the biggest chunk of that, how that kind of moves as we move ahead.
Interesting. So you're saying aviation demand is not that much as compared to the larger industries, let's say power generation.
Yeah.
So this change doesn't make much difference. Okay. Thanks. That's really helpful. I'll move to a few other questions on slightly different topics, especially on this analysis that you did around purchasing, right? So you created these 3 scenarios. I can maybe move back to those slides as we discuss them. Yeah, so mainly I'll start with the first question is, what date did you take when you were looking at the third scenario, buying every month? So which day of the month did you consider?
We are not actually considering any specific day of the month, but these calculations are in fact based on an average UA price that we have taken for each month.
I see.
Where purchase would happen.
Interesting. And yeah, that's clear. Okay, and what would you say is like so the savings comes up to about 2,000 to 2,500 euros if you do it on a monthly basis. And my question is more around price volatility. So there's a diff, right? So there's a diff with you buying allowances in scenario 1 versus buying allowances in scenario 3. And how does that diff change based on price volatility?
So I think it's difficult to quantify on volatility part for these two at this point. But like I said, that we have assumed monthly average prices. But of course, there's no doubt that volatility will definitely going to play a key role on a monthly and weekly basis. And of course, for that, we keep on releasing, tracking the market on both monthly and weekly basis, and keep on releasing these reports, which gives a better sense of, because if you talk about EUS, we have seen that they are impacted by such smaller events happening on a week-to-week basis. The allocations, the auctions are also happening very frequently. So dust ETF prices, energy prices, how these prices are fluctuating. So again, it impacts EUS on a weekly basis. Difficult to say that.
Yep, thanks. I guess it brings me back to the question, which is, that's a big difference, and we're just talking 1,000 allowances, and there are airlines that are buying, 10 times that much. So those cost savings can actually become a huge amount. I guess it's more about, in the case of business aviation, I think, Yasmina, this is a question for you. How different are those? When do the airlines start buying allowances, or when does the business jet operator start buying allowances? Is there do they need to wait for a prerequisite from their clients, or how does that work?
Yeah, that's the challenges I was explaining at the beginning of the webinar, right? Each operator and client is, different. They have different strategies in place. And when you're dealing with, end clients that are, it's their majority managed aircraft, not so much chartered aircraft, it's much, it's actually difficult to even communicate with the clients if they're not familiar with the scheme, with the compliance requirements, and then also tell them, you have to buy a certain amount, and this is how much it would cost. And if they fly within EU ETS scope, the amounts can be very, very significant, right? And when you say, 1,000 EUAs, it can easily be an aircraft that needs to buy this many EUAs. So I think business jet operators, their main task is not to be left with an open amount that they have to cover, right? They don't have the funds to cover for compliance that is due to the flying that a certain aircraft did. The other aircraft won't pay for it, right? So that's the most important problem they're facing. And with regular data, having regular data available, knowing if you're surpassing the thresholds or not, and knowing how much you need to buy in the end, what's your reduced scope, that's key for aircraft operators, specifically business jet operators, to be able to manage this volatile EU ETS market. I just wanted to ask another question back to Tarana. Since 2024, the deadline for surrendering the allowances has moved from end of April to the end of September, right? And looking at this particular slide and the forecast, what do you see happening until the end of September so far? I see there was a spike still in April. Is it because, and then further May, but is it because operators were just used to buying at that point? Or do you have any insights of what you think, how will the forecast until the end of the year look like with this new deadline in place?
I think if you'll see at least three lines on this chart are experiencing slight uptick around the April period, which was till now the end of the compliance period. So now that the deadline has shifted to September, and of course there are other regulatory events that are expected by the year end, which will of course create more of market speculation. So we could see definitely some pressure over there and some price going up. So yeah.
Thank you.
Does that mean earlier we had more entities buying early lump sum allowances somewhere in May when that deadline used to end, and maybe that's why you had a price uptick? Sorry, that's just speculation, but
we'll see how this changes throughout the years, right? This is the first year that the surrendering deadline has been moved, so
exactly. And what's the to the Sea Carbon team, what's the two most important signals to look at, right, for someone who's buying allowances in this market in this year? And then also, how do those signals affect price?
I think some of the signals that we have seen impacting the prices largely, I mean, or at the maximum level are fossil fuel consumption and energy prices, because we keep on seeing how what is the parity, or how EUA prices follow the fluctuations in the energy prices market as well, which we keep on, of course, tracking on a weekly and monthly basis. So I think that remains very important factor, both the fossil fuel consumption and energy prices. The second thing is again industrial activity. What is the expectation of changes in the industrial activity? Because these industrial activities would again directly lead to emissions, which will again mean additional demand coming from there. So yeah, I think these are the two things which keep on fluctuating in the market, and we keep on seeing the result in the EU ETS prices as well.
Yeah, in fact, just to add to that, for example, natural gas has been one of the key sort of things that has been playing out in the EUA market over the last few days. What we have also started doing is tracking the sectoral emissions on a monthly basis. And that is not, when I say tracking, it's more of kind of estimating how the sectoral emissions are playing month on month. And that could be a very important metric that can help understand, let's say, how, because see, EU releases report which is very lagged. You won't be able to kind of understand how the emissions are currently. But with that kind of monthly report that we are launching, you would have an idea of how kind of the month-on-month emissions are increasing for each particular industry. And then we aggregate it to come up with, let's say, an estimate of the overall surplus or bank, how it would play out. So those can help you in really determining how tightening or sort of how the market would behave. And along with that, obviously, there are certain action plans around in terms of, let's say, CBAM and kind of carbon capture. All those things would definitely play out. But yeah, this could be a good sort of way of understanding how the market is moving.
Understood. And Nikhil, if you could take a few minutes to explain the correlation between natural gas prices and EUA prices, just to clarify the whole power generation utility sector, CO2, and yeah.
Yeah, so everybody kind of understands, I think, that overall EU has been sort of largely dependent on the natural gas, which was initially coming from Russia. Then recently, as in based on the Russia-Ukraine war and the things that moved out, EU went into a kind of introspection in terms of how they can kind of move beyond the Russian gas supply. That also led to kind of a front loading, which helped in understanding how overall they could probably use all those resources to look at how they can diversify their energy needs. But with all that still they are progressing a lot on the renewable energy side, but then natural gas still forms a kind of an important element into their energy requirements. And based on how the weather fluctuates, for example, if there is a winter season, natural gas needs to be sort of used more for heating purposes, and your overall energy requirements from fossil fuel then kind of increase. And that leads to an overall impact on the pricing of the EU ETS, because the more the emissions, the more kind of EU ETS that you would need to purchase. So that's in a way how it kind of pans out. EU has also started maintaining a reserve, which is close to, I think, its capacity right now. But yeah, so natural gas continues to play an important role for the EU till the time they are able to completely kind of or at least mitigate it to a large extent.
And we have been seeing these drastic changes in the renewable energy mix in the EU, right? It's picking up quite fast. I guess that adds to that adds to the decarbonization pace.
Exactly. Yeah. Yeah. That's one of the key sort of results, I would say, from this front loading that has been done. And they're definitely sort of moving. Germany's obviously front running in that. But then the key thing is for all the EU nations, especially those who do not have those many resources to kind of come up the curve at a common ground. I think that is the key thing that they have been able to take into account all those things, but that needs to continue going forward also.
Yep. Great. Thanks a lot, Nikhil. Tarana, Yasmina, I'll just quickly summarize what we've done so far and what we've spoken about. So essentially, there's enough surplus in the market today that EUA prices don't jump unnaturally high and should remain in the same price range. Also, the base case scenario says that you projected. Also, there's a better chance of saving or managing a lower average cost of compliance if entities purchase allowances more in a monthly manner rather than one time or lump sum. So then you can avoid all of those externalities that happen and influence prices. And also to have an idea of how prices could change, look out for natural gas prices. What do you think, Nikhil?
Definitely, I think, yeah, good to sum up on these points. It's really important to understand or kind of build a strategy around the purchases, because these are compliance related things, and you won't really want to kind of be at a place where you're not able to meet those compliances or have to pay a heavy price of that. So I would definitely say it's really important to start planning around that and see what strategy best suits you. Yeah.
Perfect. Thanks. I'll leave a few moments for any closing remarks. Yasmina, from you, Tarana.
Thank you very much. This was very informative.
Yeah, likewise.
Great. Thank you for taking time out, everyone, for tuning into our content. This brings us to the end of the webinar. And if you've enjoyed the content or felt that we could do something differently, feel free to write to us. We'll be back relatively soon, hopefully on a SAF and a refuel EU webinar, because that seems to be boiling a lot of heads in the aviation. But that's all for today. Have a lovely day and goodbye.
Thank you so much. Bye.
Thank you. Bye-bye.
Thanks. Bye.